I hit my rock bottom because I gave up.
Yeah.
I totally felt like I gave it my all. And me and my business partner together, we had like $300,000 on the line
Wow.
with the investor. If we didn't close that deal, the seller would take that money and move on. And I remember talking to my dad and just thinking to myself, it's okay. I'm willing to lose my share, which is 150,000.
Mm-hmm.
It's a lot of money. I'm borrowing it to begin with. I didn't even have the 150,000. So
Yeah.
I'll take that debt and I'll rebuild the business. I'll rebuild my life. I'll live on. Like I was ready to quit.
All right, everybody. Welcome back to the Lead God podcast. Today we have on Rob Beardsley. This guy's a super special entrepreneur, not only because of what he's done in the real estate space at such a short time frame, but also the age that he's done it at. Currently, he's done $540 million in transactional volume through the multifamily sector. They've purchased over 3,600 units within that. So that's an extremely hard thing to do for any seasoned entrepreneur, but to be doing it at his scale and his speed is something that I haven't seen before. So, Rob, I want to appreciate you jumping on the show. And how you doing, man?
I'm doing good. Great to be here.
Good, man. Well, I'm excited to talk to you, hear your story, figure out how you got to where you are at such a young age, but more importantly, that you're doing things in a massive way. So let's kick off the show. Where'd you grow up at? How'd you get into this whole game?
I grew up in Northern California in Silicon Valley. So I was fortunate to grow up in a great family. My parents, very hardworking. They ran a residential real estate brokerage firm from home. So they were home all the time. I spent a lot of time around my parents. I spent a lot of time around them while they were working. So I got to see them work. So I kind of learned definitely work ethic and just general business, and then specifically real estate business, just by being around them a lot and just hanging around in the office a lot, in the home office. But with that being said, growing up in Silicon Valley, there was a lot of excitement and pressure to go into tech. Our neighbors were successful in software and startups and all that stuff. And so my parents were kind of working hard and struggling in real estate, and they thought, oh, well, I should go into tech. It'll be much better for me. And that was kind of my journey. So I went to college. I studied information systems, which is a mix of computer science and business. I figured I would go into tech consulting or join a startup. But then when I was in college, I just started researching and was fascinated by, okay, how do I make money? How do I do business? How do I invest? And I got the real estate bug. So because I had that background in single family, once I started doing some homework online and reading up on multifamily, everything clicked for me. It made a ton of sense because obviously it's not rocket science to understand going from single family or one unit to multifamily or 100 units, right? It's a very logical scaling approach.
Got it. So you grew up around real estate. So, and you saw probably the good and the bads of that, I'm assuming through multiple different cycles. I'm surprised that didn't kind of scar you or kind of scare you from jumping into it, right?
Well, it's a good point. I wasn't attracted to real estate at all, especially growing up. My parents, being in the brokerage business, they were hustling for commission checks. And sometimes, they would have a high income. They would also have high expenses. They'd also have high stress. And we were caught in that middle class trap where my parents weren't accumulating assets or growing their wealth. So that to me really did not resonate. I did not like that at all. I mean, of course, easy for me to say. I'm the kid enjoying the middle class lifestyle, and they're able to provide me with all the education and help and coaching for sports and everything. So, I mean, I was very fortunate to have them pour so much into me. But at the same time, they weren't saving. And so when I saw that piece scarred me. So I grew up very much a saver, very much kind of just counting the money and being very careful because I didn't want to fall into the trap that I saw my parents were in. So that was the big mindset shift, which is don't chase the paycheck, don't chase the commission, build assets, build long-term wealth. And that's the fundamental difference that I see between single family and multifamily. Yes, it's possible to flip them, and you could make short-term wealth in multifamily, and you could potentially build long-term wealth in single family. But I feel like generally speaking, a lot of people look at single family and they think about flipping for short-term cash. And then multifamily is a longer investment. Typically when we look at deals, we look at them as a 5-year investment. And so when you start putting your longer term investment mindset on and you're thinking, okay, I'm going to invest 5 years, your whole mindset changes. And I think that's what allows you to really do very well over the long term.
Yeah, and I think too, it starts to offset the risk a lot, right? Where you have multiple units, cash flow, scale, all those things offset the risk and the repetitiveness of the single family market if you're doing some sort of flips or even, shorter term holds. So, and that's always made sense for myself. Um, were you an entrepreneur prior to, jumping into founding your company? Did you start any businesses, or what was that kind of that gap that you had to bridge to starting your company? Or what was that switch that made you want to start your company?
Yeah, I was definitely somewhat of an entrepreneur growing up. I wasn't one of these kids who's doing all these crazy businesses and making all this money growing up, but definitely always had an interest in business and interest in making money, and also was not afraid to do things that were out of the ordinary. So while growing up, I was a natural teacher and leader. I at a very young age, I was a math tutor, working with students as well as special needs kids. And then later I was a piano tutor and then a quarterback coach. And so I've always been the teacher and a coach and stuff. So I like stepping up into leadership positions, but then at the same time, that's complemented by not being afraid to step out and do your own thing, which I think is really important as an entrepreneur, because that's kind of what defines an entrepreneur. You're going against the odds, going against the grain. And that's my kind of growing up philosophy, but I didn't have any big businesses. I mean, one thing I can think of when we were real young, my sister and I, who also works at our company today and does a fantastic job with us, we had a ton of tomatoes growing in our backyard. We just had way too many tomatoes. And so we ended up picking them and bagging them, weighing them by the pound. And then we just set up, instead of a lemonade stand out front, we just set up a stand to sell tomatoes by the pound. And
I
that
don't
we
think I've
did
ever heard
pretty
that
well
before.
there.
A tomato stand. I don't think I've ever heard that. That's
Yeah,
awesome.
yeah.
So yeah, so I mean, not all entrepreneurs are kind of built that way. I mean, I never started a company. This is my first company I ever started. So this is my first entrepreneur venture, and just luckily just worked out. But I think sometimes you learn things when you're growing up, and you see things your parents did or your surroundings, and it starts to craft like, hey, what do I want to do with my life? And then also how much control do I want to have, right? So I know you went to college and you started Lone Star after that. So obviously that's a big jump from college to running a big real estate syndication. Kind of take me through there, where you're at in your mindset when you're in college, and that transition into entrepreneurship.
Yeah. So like I said, I caught the real estate bug in college, and that was my first year. And then I think somewhere I'm going into my second year, I met my business partner at a conference, because once I started getting involved in real estate, I started attending weekly and monthly local meetups in the area, I went to Carnegie Mellon, which is in Pittsburgh. So I was checking out meetups and stuff like that in Pittsburgh, and doing online networking and learning and attending conferences. So at the first major conference I went to, I met my business partner, Kent, who together we later started Lone Star, which is what we operate today. And so he was a tax attorney at MetLife for 10 years. So he had a longer career, longer professional career. I was still in my second year in college. So we were both wanting to do something entrepreneurial and wanting to start something, but individually we both obviously were busy. I was busy with school, he was busy with work, but together we could lean on each other and kind of take that leap of faith together. So we actually put our first big deal under contract together while he still had his job and I was still in school. But then once we put it under contract, it gave me the confidence to go to my academic advisor, talk it through with him. He said, yeah, I recommend you take a leave of absence, go pursue this. If it works out, amazing, good for you. If it doesn't, good experience. You can come back and finish school. And to me, that just made a ton of sense. It wasn't a big emotional decision or anything like that. It wasn't
Yeah.
like I'm dropping out and I'm, going to prove everyone wrong. It was just very straightforward, right? Hey, if it works, it works. If it doesn't, I'll only be better for it. I've got plenty of time in the world. When you're young is the time to take risk. So luckily, it worked out really well. And so I left school first, and then that gave the green light and confidence for my business partner to leave his job, which is really one of the craziest elements of our journey. Because for me to take a leave of absence, some people might think that as a big risk,
Yeah.
being a dropout and all that stuff. But compare that to the risk that my business partner took of walking away from a multi six figure income and the security of that, while he has a family with multiple children and all these established liabilities. That
Yeah.
is a crazy risk. And so I really appreciate him hanging in there and being willing to take that risk. And then I kind of joke with him that back then, when we were going through the throes and stresses of getting Lone Star off the ground, I played part-time therapist to him as well while we were
Oh,
going through
yeah.
these super stressful times.
Yeah, I bet. I mean, when you got obligations and bills, heavy bills, right, and family. That's a hard transition to make into part entrepreneurship, especially in, as your established career. So, what do you think made him want to partner up with you particularly? Because I'm sure he had maybe potentially some options. What was it that made him want to link up with you and start this company?
Yeah, we get that question all the time because looking back on it, I mean, looking at it today, it makes sense. And you go, oh, well, you guys are great partners. Everything, you
Hmm.
guys complement each other. But then if you think back to 6 years ago, but now to when we started the company, I was just turned 21 years old.
Wow.
And what could he have seen in me at 21 to think, yeah, it's a good idea for me to bet my family on this partnership? That's a really crazy thing.
Yeah.
I mean, maybe I have gotten a good answer, but I don't remember it. So I need to get that better answer from him. But the way that I saw it was because I was young, I was extremely humble and had a very strong work ethic. Not that if you're older, you can't have a strong work ethic as well. But
Yeah.
what I'm saying there is the partnership when it started out, in my opinion, it wasn't 50-50 effort wise because he had a job. He was much busier than me. So I
Mhm.
think he looked at me as a way that he could kind of shortcut his journey there because I was willing to work so hard and put in all this work. And that element or that dynamic worked out because I was younger and looked at it like, okay, I'm going to overcome this shortcoming through hard work. I don't mind if I work twice as hard and we're still 50-50 partners because I'm overcoming my shortcoming of being younger. So that is something that I think worked out really well. And that's a dynamic that's underpinned by respect. And I think any relationship of any kind, whether it's relationship or business partnership, employees versus employer, respect is the most critical ingredient. And that's something that we have always just done really well with, never had any arguments or anything, like no problems.
Yeah. And I think that's, when you, especially with partners, I have a partner in my business and you have to be flexible. And there's times where you may need to lift more than the other for whatever reason. Maybe in the startup stage, maybe later on when the business is more established and, something's going on in either one of those lives. But being flexible and just knowing that, like, hey, like I got you if if you can't do this, or I need to take on these tasks because of XYZ reason, right? And obviously you probably saw that you were working probably extremely hard to get this off the ground, and that probably really sold him on potentially really going all in on this thing. Did he eventually leave his position once you guys got your first deal kind of under contract and then it kind of got rolling?
Yeah, I can't remember the timeline exactly. I think it was 3 to 6 months after I left school or something, but probably 3 months, something around there. It was it was tight. But to your point, I think that's a really good point that you made, which is that if you do have a 50-50 partnership or relationship, it doesn't mean it's going to be 50-50 every single day.
Yeah.
and someone might need to step up or kind of cover for someone. However, imbalances can't go on forever.
Hmm.
So you have to be cognizant of that and understand where you are in the relationship and make sure that if the situation isn't 50-50 at the moment, you kind of have to manage that and kind of figure, okay, let's make sure we communicate so that way it doesn't bottle up and then blows up on you later.
Yeah, 100%. I mean, there definitely has to be some points where it's like, okay, this is more 50-50 now, but there's just times in the business and life cycles of whatever's going on where some's going to lift more than others. But once you guys got your first deal under essentially kind of contract, it was kind of off to the races. Can you kind of go into that deal a little bit if you can? Kind of what were the maybe the logistical challenges? It's a first deal. I've read a little bit online that it was a pretty sizable deal too for your first one. So could you kind of go through that and walk through the process a little bit?
Yeah, for sure. So I think that it's funny because there's definitely a lot of advantages to being experienced, but there's also advantages to being inexperienced because you are naive and you don't know any better. So you kind of have blind confidence, or you might have blind confidence. I was kind of like, I was listening to an MMA video yesterday, and the guy was talking about how if you've never been knocked out in a fight before, you're not the same after, not because your head hurts or you're injured. It's because your confidence isn't quite the same after you know that you've been knocked out. So it's kind
Yeah.
of the same thing. We had never raised money before. We'd never done a big deal before. So we didn't know exactly how hard it would be. So we just said, oh, well, how hard could this be? Let's just go for it. So our
Yeah.
first deal was in Houston, which is one of our major markets. It was 261 units. We purchased it for 15.4 million, and we had to raise about $4.5 million to close the deal.
Wow.
And generally speaking, the way that these processes work is you have somewhere between 60 to 90 days to close the property from when you put it under contract. And so unless you operate a big fund, which very few people do, most people raise money on a deal by deal basis like we do. That's a pretty tight timeline to where
Yeah.
you need to reach out to investors, secure commitments, and then fund and close the deal. And so
That's a
the
really
thing
tight
that's,
time frame. That's like,
yeah,
I didn't know it was
especially,
that close. And you got to keep these investors on board, right? And you got to get the due diligence done and get that deal closed.
yeah, I mean, transacting is still something that I think we can definitely improve a bunch on. And that just speaks to the complexity and all the things that go into closing a deal. Like you just said, you've got to raise the equity, but at the same time, you need to do the due diligence. And at the same time, you need to work with the lender and secure the debt.
Yeah.
And so there's a lot of pieces that are happening concurrently. So it's just not a simple process. And for your first one, you don't even know what that process is. So not only is it a difficult process, you don't even know
Yeah.
what the process is. So we were just late on everything, missing on stuff. And the biggest issue, which is for most people when they're starting out, was just where are the investors? Here we
Hmm.
were thinking to ourselves, well, if we find a good deal, the money will come. But there was no money. We didn't spend the time to build relationships. We were so focused on real estate and fundamentals and deal flow that we didn't really nurture any investor relationships. So instead of talking to investors beforehand, we didn't. And then once we had the deal under contract and we needed capital, then we were calling investors up, and we didn't really build a relationship beforehand. So or have a track record for that matter,
Yeah.
right? So it's super
Yeah.
hard to raise money on your first deal for all those reasons, and we really really struggled. And I think instead of 2 or 3 months like it normally takes to close a deal, we had to beg for extension after extension. I think it took us like 6-7 months to
Hmm.
actually close that deal.
Yeah. And was that mainly due to just the financing or just the whole thing, due diligence, lenders?
Yeah, I mean, we had slight delays on due diligence. I think we pivoted from one or two lenders. We pivoted from one to another property management company. And then, of course, we just took a lot longer to raise the equity than we figured it would, just due to our inexperience and lack of relationships. My favorite phrase when it comes to this story is just the fact that we didn't dig the well before we were thirsty.
Yeah.
That's the big piece of advice is, and also this is just another classic phrase is do things when you can, not when you have to.
Yeah.
So
Yeah.
that's the key.
Yeah. And I think as entrepreneurs, you don't really know everything that's ahead of you. That separates the guys that are successful that I've seen and talked to in my life is they just put one foot in front of the other and they tackle the challenges that are ahead of them, right? And it's actually what entrepreneurship is really truly is. It's tackling problems for economic value, right? It's tackling challenges each day within your business, your competition, the economy, and then how do you actually create economic value for yourself and for your company, right? So I think it's that's what an entrepreneur is. It's just tackling challenges to actually get to the next stage. So you guys were doing what every entrepreneur was doing, is just figuring out as you go. And you guys were obviously ready for it at some point, right? You did enough due diligence and homework where investors had confidence to actually invest in that first deal with you, and eventually you were able to kind of scale from there.
Yeah. And of course, we were very fortunate to be at the right place at the right time. I mean, choosing to invest in Texas is not a genius move, but it is a good move because it's a great market and has grown well. And when we bought that first deal in 2018, that was a good time in the market because the market continued to appreciate and interest rates went down over that period of time, which always helps, of course. So,
Yeah.
uh, yeah, like you said, it does help certainly when you have a fundamentally good deal, and then of course when the deal does turn out well, then that helps a ton as well. Now, where we are today, we can look back at that deal and having sold it for 22 million after buying it for 15.4 and having a good exit there and then another quality exit after that one. It's now complete, we're in just a completely different business and environment where we have a track record and infrastructure and a team and everything. So doing deals moving forward is, it's just a completely different experience.
Yeah. And I think too is like, it's like anything else, even probably when you're in football, right? The confidence that you build over little wins eventually just makes you feel more confidence about the next deal, right? And it just kind of pushes you further along. And then eventually things just get bigger and bigger. What I'm kind of like more impressed with, not only just putting together the deal structure, but hey, it's actually a pretty big first deal, $15 million, deal on your first one, without having done a deal previously, right? You didn't do anything before that.
No.
Yeah. So your first deal is a pretty significantly sized deal. If you can the reason why I'm always curious about how did this thing kind of kicks off is like, what was your guys' mindset like going into that? But why did you guys want to start at a larger deal like that? Was there any reservations of being like, hey, maybe we should start on a smaller deal size, 200 units, 15 million? I mean, that's pretty daunting for any first time real estate entrepreneur. And that's just, anybody, right? What was your thought process going for that target market at that point?
Yeah, I think it was definitely bigger than we probably would have liked. In a perfect world, we would have chosen a smaller deal, but that was the deal that just came across our desk and made sense.
Hmm.
So it was hard to look at a good deal and then turn it down because it was slightly too big. And
Yeah.
like I said, we were naive to not know just how difficult it would be, because if we knew how much we would struggle on that, we probably would have turned it down.
Yeah.
Right. So because we didn't know, because we were naive, we were willing to take the risk and willing to jump into the deep end. So I'm grateful for being naive and not having all that experience to know the difficulties there. So that's kind of, yeah, I mean, I don't think we overthought it or really had this master plan like, hey, we need to start big, go big to
Yeah.
start. But it makes a lot of sense. I mean, because what the beauty of this business is the scale
Mm-hmm.
and the fact that it really isn't that much harder to do. I mean, the things that we talk about today are the difference in doing a $10 million deal versus a $100 million deal is not that significant.
Yeah.
So once you kind of master the game, which of course we didn't have it mastered at that point, it just is very smart to bias yourself towards larger deals. It really actually makes things easier, not harder.
Yeah. And so you guys sold that first deal, and then you mentioned that you had another acquisition after that, and then an exit as well. What was? Did you guys wait till that first deal was actually sold to roll it in, or did you actually start targeting the next project when you guys were still had that asset under management?
Yeah, we bought the next deal also in Houston, also off market, a year later.
Oh wow,
So we were in buy mode. We were trying to grow the portfolio, but we were, I'd say, patient, and also we were just, I mean, of course, we couldn't buy everything that we wanted to because we were still growing our relationships with investors. So
yeah,
we were constrained by the amount of investors that we had or didn't have, which is something that I frequently talk about in our business, because the two main ingredients in our business for growth are deals and capital.
yeah,
And so I often will say, okay, well, in this business, and in this moment in time, are we deal constrained or are we investor constrained? And that can shift and change, and it can depend on who you are and your abilities. And so for back then, we were heavily investor constrained. There
yeah,
were good deals in the market, but we lacked the confidence and we didn't have as many investors. Today, funny enough, it's flipped at this particular moment, right? It can change again, but right now there's not that many deals in the market. We're recording this in January of 2024, and it's just the start of the year. It's a bit quieter. So we're certainly deal constrained. We have oversubscribed deals, and we have investors who'd like to invest more. And so uh, I'm always kind of looking at tweaking the algorithms of our business and thinking about, okay, are we deal flow constrained? Are we investor constrained? How do we grow the business? So anyway, long story short, yeah, we bought that second deal a year later, and it took like 6 months to negotiate with the seller because we were so stubborn about the price. We were just kind of working down the price, working down the price. And that's just how a lot of our good deals come together, is we're very patient and we hang around the hoop.
yeah. Well, I think that's again, like I feel like doing your first deal, you may be like, when like, okay, let's see how this kind of maps out within a first year. So you guys were already kind of, once you guys essentially closed it, you guys were starting to manage that thing. And then you were off to kind of just find the next deal, because it took you a year essentially to get that one deal closed after the closing of their first one. And it took you 6 months to actually negotiate it. So you were already kind of like hitting the ground running, trying to find your next property.
Yes, absolutely.
Yeah. And what gave you the confidence to raise that capital again? And what was the difference in the first deal and the second deal in capital raises? Because, like you just mentioned, raising capital was probably a little bit harder than you probably imagined going into it. And then what gave you that confidence? Like, hey, we're pretty confident we can do this again. And it was a larger fundraise on the second deal.
Yeah. So the funny thing is, the second deal was actually a $3.5 million raise instead of instead of 4.5.
Oh
So it
wow.
was $1 million less capital to raise, slightly smaller deal, but we actually had an even harder time on that deal than the first deal. I think
Really?
in part because a lot of our first time investors on the first deal invested in that first one, and
Yeah.
then they wanted to sit back and wait to kind of see the results of that one before they invest again. So we were tapped out on some of our friends and family, and we were just back to square one on this second deal. So the confidence came from the fact, like you said earlier, you kind of build wins on each other. So we ended up did close that first deal, raise the money, got it done. Was painful, but we made it happen. So we figure, okay, well, let's throw ourselves in the ringer again. Let's go for it again. And this is the business that we're in, right? If we want to
Yeah.
be in this business, we have to do this. So yeah, so we went for it, and we struggled even more. It was so hard. And I remember actually at one point I hit in some ways my rock bottom because I gave up. I
Yeah.
totally felt like I gave it my all. And I personally, me and my business partner together, we had like $300,000 on the line
Wow.
with the investor. If we didn't close that deal, if we walked away from it, the seller would take that money and move on. And
You guys
I
were
was
hard 300,000.
Exactly.
Wow.
And I was willing at that point when I quit on myself, I I remember talking to my dad and just thinking to myself, it's okay. I'm willing to lose my share, which is 150,000.
Hmm.
It's a lot of money. I don't I'm borrowing it to begin with. I didn't even have the 150,000. So
Yeah.
I'll take that debt and I'll rebuild the business. I'll rebuild my life. I'll live on. Like I was ready to quit. That's
Mm.
where I was because I felt like I gave it my all. But fortunately, I kind of picked myself up and uh, reached out to a couple more potential partners who had already turned the deal down. And we ended up bringing in a really fantastic partner into the deal and totally turning around that deal and really just hitting a home run on the deal, building amazing relationships out of the deal. And in that pocket in Houston, we sold that property, but we bought a couple properties right down the street. So it's a pocket that we like a lot and have continued to see success in. So it's been a really great deal. And, every difficult situation is obviously just an opportunity.
Yeah, and I think you mentioned something right there when you said you're about to give up, right, or kind of throw in the towel. Every entrepreneur feels that at some point in the business, and even after you have wins, right? There's been multiple times in my business where I've had my biggest year, and the next, you're running through some challenges, and you're like, I just don't know if I got it anymore. Like, am I making the right decisions? Maybe I'm not meant to do this, right? Like, you have these like mind games that play with yourself, and it's the psychology of like the entrepreneurship is actually the hardest part. The day to day stuff is obviously it's hard, but it's once you get it down, it's pretty easy just to kind of operate in that. It's actually the mental game to stay consistent, to stay actively focused on your goals. When things are kind of challenging, it's hard to do that, right? So, what do you think actually mentally got you through that hardship right there? Because that's at the end of the day, that's the definition of the entrepreneur: fixing problems and overcoming challenges. What do you think that switch was to actually keep you going and finish that raise?
Well, I was just saying how I got to that low point where I was ready to quit. But at the end of the day, losing $150,000 is a very strong motivator.
Yeah.
So putting your back against the wall and really having quote unquote no other option is really an effective tool. And
Yeah.
a lot of people, I don't know, there's external motivation and there's internal motivation, right? So
Hmm.
that would be a form of external motivation, which I think is great. I don't think there's anything wrong with it. Like some people think that that's kind of cheating, like, oh, well, you shouldn't need external motivation, you shouldn't chase money or something like that or success. You should just do what is right on the inside or something like that. But you know, the external matters. And so the
Yeah.
fact that we were potentially going to lose a lot of money was a very strong motivator to kind of just keep at it every day. What
Yeah.
else am I going to do? I have no other option.
No, and I agree. Like, you put yourself in a position where it's like you have to get this done, right? And not only that, where you have like the financial burden of maybe an office or employees or just deal money in an actual deal, whatever it is, you have money invested into it. You don't want to just walk away from that. But also too, sometimes you have a chip on your shoulder, right? And you want to get it done for the mere fact of, I want to prove that I can get this done because I've been talking to my friends and family and everybody knows I'm doing this now, right? And sometimes you have a chip on your shoulder where sometimes you need that external motivation to kind of keep you going. And it's helped out through my life, right? Where I feel like, I wanted to prove that I can do something bigger than the people that were around me, right? No other reason than just to, prove it to myself and have that kind of mental win. So there's nothing wrong with that. You know what I mean? And I think it's actually part of the successful entrepreneur's mindset is having that chip on their shoulder to continue when things are, not in their favor, right?
Yeah, no, I totally agree. And that's the benefit of being public and, like you said, telling all your friends and family this is what you're going to do,
Hmm.
and wanting to go and prove it right. And yeah, it's definitely, this sounds kind of harsh, but right, the shame of failure is real when you put yourself in that situation and you take it so seriously.
Yeah.
You're definitely fully kind of wrapped up and identify with the success or failure of the business or that particular project.
Yeah, no, I 100% agree, man. And I think that is truly what separates the guys that do really well in any market that they're in, is just getting over these humps. And then it always happens like this. As soon as you get through it, your business tends to take off, right? And I'm going to take a guess. Is that kind of what happened after that? Because obviously your transactional volume kind of shot up. What happened after your second kind of closing and things started ramping up? Obviously, the pandemic was around the corner. So take me through that kind of scale up that you guys probably saw in your business.
Yeah, so we had an interesting couple events that occurred after. So, like you just said, less than a year later than that second acquisition, COVID happened, which shifted some things around. But prior to COVID, we had actually formed a joint venture, like a programmatic joint venture with a private equity firm. So we were really excited about that. We thought that that would really take us to the next level, like you said, and give us a ton of growth opportunities. So we were doing just that. We had closed one deal at the beginning of 2020, or even two deals, and then we had two more under contract. And then once COVID was announced, our private equity partner just called us and said, drop the deals.
Yeah.
And just drop them, walk away. And so we were able
Everyone's
to walk
scared.
away. And because COVID was, the seller didn't even though the money was non-refundable in one of the deals, the seller didn't even fight on giving us the money back. He just was like, yep, this is force majeure. Here's your deposit back.
Wow.
So our partner got their deposit back, but we were left sitting around with no deals. And so for the rest of 2020, we did some other we actually ended up doing some preferred equity loans, which were interesting, but but that really didn't do much for us or grow the portfolio. But yeah, for the rest of 2020, we didn't do much. We kind of sat around and watched the market, which a lot of people did.
Yeah.
Which a lot of people now looking back kick themselves for doing, because you look at the amazing buying opportunities and the prices coupled with the drop in interest rates. It was a fantastic time to buy. Really, really was. So yeah, that kind of put us on pause for a year, but then we kind of shook ourselves awake in 2021 and we started going into buy mode and really just grew a ton from a investor relationship standpoint. At that point we'd grown, established ourselves, and things were really starting to click.
Yeah, and I think sometimes there's like these periods where you just got to kind of see what's going on with your market, right? Like during that time, there's a lot of uncertainty. Even though interest rates were low, who knows? Investors were maybe uncertain. I know I was, right? During that time, I was on like conservative mode and just trying to protect and try to figure out what's going on and to save, my business and all that stuff, right? So sometimes there's times where you just got to kind of sit back and kind of watch. But then obviously with interest rates being, at historic lows, did that just kind of catapult your business alongside with your new capital partners and overall confidence in your previous assets?
Absolutely. Yeah. Going back to what you just said there about that period of concern and uncertainty, that's the challenge of the investment business. That's one of the biggest things, is our human psychology gets in the way. And when the deals are best, that's when we're most concerned, and that's when we're fearful, right? And
Yeah.
it's really hard to fight those instincts. But I hope that through living through multiple cycles, we will build that skill set to kind of understand the direction that the winds are blowing and be able to lean into opportunity, which is frankly what I feel is happening right now. Right now, we're in a period of time where prices have come down and interest rates are on their way down as well. I don't know if the opportunity is going to be as big as COVID, but the good news is, while I don't think the opportunity is going to be as big, I think it's going to be around for longer, because that opportunity during COVID was very short in time.
Yeah.
It was maybe about 6 months. And even though it was 6 months in time, it's not like there was a lot of deals happening back then, right? So I think this opportunity is all of 2024. And I think there's actually going to be a decent opportunity set. So
Yeah.
that's what we're gearing up our psychology for today.
Yeah. And let's take you kind of fast forward today. So I know you guys have obviously had a huge success, done multiple properties and transactions. You guys integrated with a in-house property management company. Is that right?
Yes.
So now you guys are kind of full circle. You have your obviously capital raising in-house, you have your property management in-house, and your underwriting. So what is it? What does the picture look like for right now? And obviously with the current state of the market, with a lot of maybe management of past assets of other owners that have maybe took on debt that was a little more aggressive. Where do you see yourself now that you guys are positioned kind of fully integrated to take on probably a massive share of the marketplace, what you guys are targeting? If you can kind of share on that.
Yeah. So looking at 2023, it was a year of change. And so the market had to digest a lot of volatility in the interest rate
Mhm.
environment, as well as change in price. So seller expectations needed time to adjust, because a seller isn't going to just wake up to the realization that their property was worth 30 million and now it's worth 25 in
Yeah.
one night, right? That's going to take them several nights to sleep on to really realize and accept.
Hmm.
So there's a lot of that transition going on in 2023, which meant there was less actually going on. So we ended the year at right around 150 million in acquisition volume
Wow.
for 2023. So I'm just saying that to put that into perspective, because 2024, we think the opportunity is such that we can shoot for 300 million in acquisition volume.
Wow.
So that's the goal this year, and that's how we're positioning ourselves to accomplish that, is through growing the team, making sure we have the right team in place, which we've done a great job of hiring. We actually just hired for a new position, which is a controller. That's a senior position. It's going to help us a ton. I cannot wait. It's brand new. This is the first time I'm sharing this publicly. So this controller coming on board is going to supercharge the business, help us be more organized, help us with the existing portfolio as well as with our acquisitions. So that's going to be really fantastic. So yeah, just investing in the team.
Yeah.
And because what we saw in the last few years, and this is happening all the time, and in any industry as well, is you'll see companies grow like crazy,
Hmm.
but they get over their skis, which I'd say at the end of the day is a better problem than not growing at all. But
Yeah.
still, it's quite dangerous, especially in our business where reputation is so important. The last
Yeah.
thing we'd want to do is grow so quickly that we drop the ball and things slip through the cracks, and then all of a sudden investors don't trust us as much. So while I appreciate your intro and saying that you've seen our growth and really are impressed by our growth, I also really want to couch that with the fact that we're trying to grow the right way. And
Yeah.
the way that we look at it is we're very concerned about our investors being able to sleep well at night. We're able to sleep well at night. And yeah, that's our long-term mindset.
And I think it takes it's reinvesting back in the business, right? Where it's kind of like it's like what I've noticed in my business is you get to a certain level and you can keep growing, but a lot of things are going to start breaking. So each level of your business, you're going to notice, right? Things start breaking in, or maybe not use the word breaking, but it starts to get challenging handling the logistics of the scale, right? So that's why you have to reinvest and put the systems and the people in place and the culture of the company so you can continue to foster the current employees and also the employees that you're bringing on to handle the kind of the next stage of growth for your company. And how are you handling that? I mean, you're putting obviously in new people into your company. At the same time, you're managing, a massive uh, capital raises, and now is culture, right? How are you able to manage all that on a kind of day to day basis? Would you say? What's your kind of secret sauce to make all that work?
Yeah, it's a really important question, and I like that you added the day-to-day piece to it, because the the interesting thing about that, in my opinion, is everything you described or asked, it pretty much has to be done day to day.
Mhm.
You can't just have one speech. You can't just get your team in the conference room and give one talk and you've done the culture work for the month, right? Culture
Yeah.
is day to day. It's every meeting, every interaction, every email. So just as an example, speaking of email, we pride ourselves on responding back to investors and everybody quickly, right? That's a that's a value for us. That's culture. And so we kind of we certainly take pride in that, and then we kind of
Yeah.
compete with each other on that, right? Like we'll flex on each other and be like, oh yeah, do you see how fast I just responded to that email, or I'm getting back to this person, we're moving this along quickly. So speed is a big value of mine. That's a core trait of mine,
Yeah.
and I like to bleed that over through the culture.
Hmm.
And so that's just a small example, but an overarching thing which I think it has become more controversial after COVID, but that is the office. You know, here
Yeah.
I'm sitting in the office, and it's a big decision these days to invest in an expensive office and to require your people to come in. And then,
Hmm.
moreover, this nobody does this anymore, but we require everyone to be wearing a suit and tie,
Yeah.
and that is all culture. It's all by design, and we're going to naturally attract people who are on board with that vision,
Yep.
and we're going to turn away people that aren't on board with that vision. So that is, I think it's finding the right people, and then it's instilling the right culture and values.
Yeah. And it's like you said, it's extremely hard. As your team grows, what I've came to realize is you're managing actually like personalities, right? Or you have management in place to manage those personalities and also foster a culture for opportunity, growth, vision, right? So I think doing all those things as a first time entrepreneur myself, it's been a learning curve for myself, right? It's a constant learning and taking in information I see online on YouTube or books or whatever it is to get better at that. Because one part of the entrepreneurship, as you know, as a founder, is the operational side. And then the other part is the actual vision side of, hey guys, this is where we want to go, this is how we want to get there, this is who we want to become to actually do that, and this is why you're important to that vision. So the vision part is actually really hard, and it was more challenging for me because I'm more logistics and operations, where it's very like numbers, right? Numbers driven. So has that been a challenge for you, fostering that vision or stepping into that role as essentially kind of the head of the company and leading that charge?
Yeah, it's certainly a challenge, and I think it's the one of the most important things.
Hmm.
Like I always say that the two most valuable skills in the world are sales and managing people. So for us, we're really lucky first and foremost because we have a great team, and who we've hired, for example, just like my sister, for example, she's incredibly competent, but also more importantly than that is she has 100% buy-in. I trust her
Yeah.
100%, and she treats the company like her own.
Yeah.
Similarly, you've met Craig. Craig was one of my best friends before he joined the company, and so we took that leap together of going from friends to being in business together. And so and also going from being friends to now boss to employee, right? And having to manage those dynamics and go back and forth between those dynamics. And so being willing to kind of get close, right? Hire friends and hire people that are family friends. I mean, we've done a lot of incestuous hiring, if you will, which has worked out really well. And I think that's
Yeah.
contributed to our ability to maintain culture and maintain a shared vision. Because to your point, when you're managing people, there's the company vision that you need to first of all work to define, and then share and inspire everyone and get everybody pointed in that company vision. That's step number one. But then there's also a whole other thing, which, like you said, everyone else has their individual visions. Everyone else has
Hmm.
their own ideas for their career and for their compensation and for their roles and responsibilities. And so if you don't have those conversations with everybody, like, hey, are you on track? Or them asking us and we telling them, hey, you're not on track with our vision, right? Because that's where you have the Venn diagram of, you've got company vision, their vision, and you need to have a good cross section that is shared. But then the parts that are outside, you need to figure out, okay, well, can we bridge the gap? Can we cater to their vision so that we can grow together? Or unfortunately, does it make more sense to part ways?
Yeah. No, I agree. I think at a certain point in your business, becomes almost the harder part of the business. What I've realized is it's actually not the operational side, because you've been doing it for so long. You have a good idea. You know what's going to come. Of course, there's always challenges and obstacles, but it's actually the other part which been harder to scale. Our company is a little bit more personnel and intensive. We have to have a lot of personnel for sales and operations, and the scale is hard to manage all those personalities, right? And that's something that's been challenging for myself, but it's also kind of great because you get to tackle new challenges within your business, where eventually, you look back a year, 2 years ago, be like, wow, I can't believe I even got to where I was with the skill sets I had. Now looking back, you look at all the things from not just the operational standpoint, but actual the leader of the company, and you start to realize, like, wow, I'm actually creating more of a package of who I would like to become as an entrepreneur and owner of the company.
Yeah, it's a really, really fun game. And that's the way I look at it. I mean, obviously, we don't, you and I don't work for free, right? Money is an
Yeah,
important driver, but I'm sure there's other things driving both of us, which are just the challenge of it and the progress, the personal growth, and everything that comes with the entrepreneurial journey. So that is what really drives me for sure, and gets me excited. And uh, like you were saying, the evolution of it, no step is the same, because the things we were doing a year ago or 5 years ago are different, right?
hmm,
Because you were working kind of in the nuts and bolts of the business, then you're focusing on hiring, and then you're focusing on processes. And so it's kind of funny, because you keep firing, as an entrepreneur, you keep firing yourself. You're
yeah,
doing something, then you fire yourself and you have someone else do it, or you automate it or something. And then you scale from there. And then you get to a point where you're kind of sitting around and you have nothing to do.
yeah,
And,
yeah. I've had
right.
those times.
Yeah, and those are nice times, but then you get, and then me personally, I get super anxious, and I'm like,
Same here.
what's going on? This is weird. But I've I've been there, and I know the feeling, and I know that out of those moments is the space
Hmm.
where you can think of the next big thing, and you can figure out how to take it to the next level.
Yeah, I remember a lot of those times where I'd be implementing new systems and personnel to handle tasks that I would do, and then I'd go look for something else to kind of go mess up, right? And sometimes it's good just to sit back and relax and let those times kind of evolve, and actually just sit back and watch how the business is operating, and sit up more at a 30-foot ceiling and be like, okay, hey, I'm seeing all these pieces move. I think we should execute better on here. But that's where it actually gets fun, because you're moving a lot of different parts, but you have competent people that you're confident in executing on your goals and your vision. So, and I think that's actually the funnest part, is when it starts to get to that point where you start delegating and you see that delegation actually working, and your business is expanding and growing at the same time.
Yeah, for sure.
So, what's the plans for Lone Star Capital currently right now? Obviously, the business is super successful right now. You've seen massive growth within your company and organization and your investors. What's the next steps for Lone Star Capital?
So currently, we're here based in New York, but we exclusively acquire Texas multifamily, and we're very focused in our markets, and so I like to keep it that way. I don't want to be spread too thin. With that being said, though, and also to add on top of that, our goal of 300 million in acquisitions for 2024, I think, is very doable by staying just in our three markets in Texas: San Antonio, Dallas, and Houston. However, I think that one of the next evolutions of growth is to add another market outside of Texas and provide that diversification in strategy and market for ourselves and our investors. So that's definitely a growth. And The thing I love is I'm a simple guy and I don't need things to be super complicated. And
Mm-hmm.
if 300 million is the goal this year, then next year might be 350 or 400, depending on the environment, depending on how this year goes and things like that. So just putting one foot in front of the other and scaling up like that is really the goal. We don't have a master plan to, I mean, first of all, we don't have a master plan to get to some crazy number like 100 billion or anything like that. We're ambitious, but we're also reasonable and uh, not crazy. And then the other piece too, which I think is really important, or at least just important to us, is we don't want to go crazy and buy multifamily, buy hotels, do retail, do development, and really spread ourselves too thin and get brain damage from all these different strategies. There is value in having different strategies because it makes you more nimble, but also if you can have a successful business and keep it simple and do something that works, that just really resonates with me. So that also tempers my desire to want to scale in all these different directions.
Yeah. So basically, you guys are just going to continue growth. You're looking to do hopefully 300 million this year in acquisitions or transactional volume, and just keep scaling the business. And is there an ultimate goal for the company, or is it right now just it's more so just about acquiring and getting more transactional volume?
Yeah, I would say there's no one ultimate goal, but I think there's important milestones. I would say one important milestone, I know it's just a number, but a billion
Yeah.
is an important milestone for companies like ours to get to $1 billion in acquisitions. So, yeah, I'm not very patient, but it's frankly right around the corner, about a year and a half or so away, right? So that's super
Yeah.
exciting. And then from 1 billion, obviously the difficulty and the time that it takes to go from 0 to a billion is huge. But to
Mm-hmm.
go from 1 to 2 billion is not as huge, right? So
Yeah.
I'm very excited to see that growth curve and just really being able to hit the stride to go from 1 to 2. And then some other kind of nice milestones are when you have built up the business and the portfolio size where things can really function without us. And when I say us, I mean my business partner and I. And not to say that we
Mm-hmm.
don't want to be involved in the business. It's a different orientation or thought process of how you approach the business, right? We want the business to be able to grow efficiently and without us kind of being all overbearing on the business. And
Yeah.
we don't want to be stressed out having to hit certain acquisition quotas and everything to be able to make payroll, right? If we want to, I won't like going back to our desire to be able to sleep well at night and our investors to
Mhm.
sleep well at night with a larger portfolio, with the best team, with the best processes, we're able to have a strong, profitable portfolio and able to pay all our expenses and grow and not stress, have lots of reserves, right? No debt. It's kind of cliche, but that's kind of one of the future milestones that we want to get to.
Yeah, and you don't just want to have a successful business just for a number standpoint. You want to enjoy while you're doing it and having fun, enjoying your life in your business. You're outside of your life, right? Outside of the business, you want to enjoy all those parts. So if you're running the business the right way, and I always tell everyone, you treat your business with respect, your life just gets 10 times better. And that's by doing the right things, treating your employees right, treating, the cash flow of your business correct, and making sure that the business is extremely successful and stabilize, so then you can enjoy your life. Your life gets so much better and you can have a very stabilized life mentally outside of the business without the highs and the lows of entrepreneurship. And thank God I've got past that point where I don't feel that as much anymore, right? And that's when entrepreneurship gets really fun. And that's when it's, when you can start to be creative and see bigger vision, because you're not stressing about these things that some businesses have to stress about, which is cash flow management and stabilization of their company and all that. But obviously there's gonna be highs and lows, but I think that's when entrepreneurship gets really exciting.
Yeah, I agree. And I would just add and end on the idea, like you were saying, it's not just about the number, right? And that's exactly right. And this is something that, to contrast our first couple deals where we're scrambling to raise every single dollar,
Mm-hmm.
and we'll take any partner that we can get. Now we're getting to the level where it's not just about, okay, we have a new deal, we need to raise $15 million. Where are we going to get the money? It's, who do we want to partner with? And
Mm.
that is a really amazing step that we're growing into, which is, well, let's not just take any investor into the deal. Let's actually take our preferred investors into the deal. And that's just a new vector of optimizing the business, right? Not just let's maximize the number, let's actually optimize the experience.
Yeah, no. And I think that's where, again, that's where business gets exciting, right? So, and Rob, I just want to appreciate you jumping on the show today, sharing your story of entrepreneurship, of the successes, the challenges, but more importantly, hopefully this motivates somebody out there to start on an entrepreneurial journey, regardless if it's in real estate or not. But taking some of the seeds that you planted today and maybe it starts something in their life where it's not only changes their life, but people around them. And that's why I love entrepreneurship. And that's why I started the podcast. But I really appreciate you jumping on the show, sharing your story. Real quick, where can everybody find you? LoneStarCapital, if they want to find out more information.
Yeah, absolutely. The best way to find out more about us and get in touch is on our website. Our website is lscre.com. That stands for Lone Star Capital Real Estate. So lscre.com. On our website, you can learn more about us, our strategy. You can get in touch. You can also download our free underwriting model tool if you want to look at how we analyze deals, the spreadsheet, how we analyze deals every single day. And we also have some other free downloads on the website as well. So we look forward to getting in touch.
Great. Well, everybody go follow Rob, follow his journey. More importantly, check out Lone Star Capital. They're doing some massive things. We'll link everything in this bio. And again, Rob, I appreciate you for coming on the Lead God podcast.
Yeah, it was a great time. Thanks for having me on the show.
Great. Have a good day, sir.